things are done in its natural sense, not stage management. So we need a proper accounting culture that has to be brought to bear in our day-to-day running of businesses.
Now, I just want to know, to what extent do banks and even other financial institutions engage the activities of credit rating institutions, or even the institute that you represent, in terms of being able to ensure that those that are given funds to actually stay by the rules of the game, as the case may be? Do they engage credit rating institutions to be able to know the credit worthiness of their clients?
That's a good question. In a credit economic environment, there are a lot of ancillary institutions that support credit approval or refusal process. And they include credit rating agencies, credit report providers, credit monitoring organizations, credit default repairers, credit bureaus, debt recovery agencies, and so on and so forth. These are so many of the institutions that are available whose activities support credit processes. Now, in Nigeria, over time, it has been the bank themselves originating the credit process and consummating it without reference to other institutions whose activities can strengthen their process of approving credit or denying credit. Banks are not doing well in that regard, but I won't blame them blindly. Nigeria is still growing, and with the emergence of credit professionals, people should be able to establish such institutions as their profession allowed. For example, credit report I talk about, credit rating I talk about, and then credit bureau I talk about. These are services that credit professionals can render when they set up their own company to provide such services. And then they market it to the banks, to the credit providers themselves, that this is what we can do. And then they can now say that, okay, we are going to get into this with you so that it can support our credit approval process, it can support our credit recovery process, it can support our internal credit rating process, so that at the end of the day, we could see ourselves to have taken objective decision in approving or declining a credit. And that will have tremendous impact on the credit customers themselves, that it is not just the bank that does the approval, does internal rating to determine who to give the money to and who not to give the money to, but also a gamut of other sources that supply needed information that enable the bank. So that, again, stabilize the system and create awareness that people who are willing to go to the bank to look for money will be subject to analysis here and there. It is healthy for the economy. It is healthy for the industry.
Now, you talked about some of the challenges that small business owners face in being able to access credit facilities, but what can be done to make them qualify? Apart from the fact that you have to keep up-to-date records, what other things should they put into consideration when they want to, apply for credit facility?
As I said before, what can make a typical credit customer applicant qualify for credit is keep your account detail in order. Every year, have your auditor to audit your company account. And
even as a small business owner?
Yes, of course. As long as you are an incorporated company, via the Corporate Affairs Commission, you are bound to generate, even if the company is owned by you and your wife or your husband is the chairman and you are the managing director and your adult children or little children are on the board of the family business. Mm-hmm. You must do the audited account every year, file up with the Corporate Affairs Commission, and then keep your own record. The day comes you are looking to go for bank loan, the bank will require 3 years audited account of your organization. So the first thing is put your house in order. 2, you must have a credible management profile from the managing director to maybe 4 or 5 people. If you have AD, you have a general manager, you have assistant general manager or deputy general manager, or down to principal managers, you have to have their profile properly captured, and inscripted in the profile document of the company. Because any lender, any investor, any business partner will require that credibility. These are the people that drive the organization, whether it will succeed or fail. So you have to put your house in order in that respect. You must also do a good profiling of your board of directors. And let me advise small business owners here that if you are in the habit of bringing in your children to the board of the company, you have ab initio killed your chances of being considered for credit. Because those directors, as infant as they are, other than yourself and your husband, or yourself and your wife, you can't take a decision to borrow. And the article and memorandum of association of your company is so specified, the borrowing power that is in there. And if the banks look that this is typically a family business whose survival is rests within the husband and the wife, what if tomorrow you are not there and you've gone to take bank facilities? So there's a problem there. And therefore, you need to now look at who are the directors, who should be on the board of this company, how credible are they, what is their track record, what is their pedigree, and then you capture that in a brief profile as well. Because whoever, whether bank or non-banking, as far as its credit matter, will require all of this. And then your running cost. You as the managing director, as the CEO, you must be on salary no matter how small it is. So as to distance yourself from the survival trail of the organization. So to make the company qualify for credit, there is need for absolute transparency, a proven evidence that the company is completely detached from yourself and that it is an entity that has been incorporated as a legal person to grow and become giant corporate human being. If you do that, anywhere in the world you go for credit, you are going to be given attention. And chances are that after the analysis, you could be approved for a credit line.
Okay, I'd like you to hold your thoughts for us for a minute.
Right.
We're going on a break. We're talking to Dr. Chris Onalu. He is the CEO of the Institute of Credit Administration in Nigeria. And we have been looking at business credit facilities, building a sound system in the country. How do we increase the level of credit that has been extended to business owners in the country, especially the small and medium businesses that are just coming up? We'll be right back.